Welcome to Invest with Alex, where we make investing simple, human, and just a little more personal. Today's episode? It's all about time. More specifically, it's about two very different ways of thinking about money: short-term investing versus long-term investing. Which one is better? Which one makes more sense for you? And is it possible to do both the right way? That's what we're going to unpack. Because when you understand time, you start to understand risk, reward, and how to actually build wealth in a way that matches your life, not someone else's. So let's step back and take a walk through the two paths. Imagine this. You've just come into a little extra money. Maybe it's a tax refund. Maybe you've saved a few thousand from cutting back. Or maybe you've decided this is finally the year you get serious about investing. You open your investing app, and now you're faced with a choice. Do you put it into something that might grow quickly so you can take the money out in a year or two? Or do you let it sit, untouched, for 5, 10, even 20 years? That, in essence, is the heart of today's conversation. Short-term versus long-term investing. Let's explore both honestly. Let's start with short-term investing. Short-term investing typically means buying something with the intention of selling it in a year or less, sometimes even within a few months or weeks. People who follow short-term investing might trade individual stocks. They might try to time the market. They might even get into things like options trading, cryptocurrency, or flipping real estate. Now, the appeal is obvious. Fast gains, quick results, immediate satisfaction. If you're trying to save for something happening soon, like a wedding, a down payment, or a vacation, short-term investing can feel exciting. But here's the trade-off: it's riskier. A lot riskier. The market can swing wildly in the short term. A company misses earnings? Stock drops 15% overnight. An unexpected piece of news? Boom. A sharp rally or a sudden crash. And unless you're an expert or very, very lucky, you're probably not going to beat the market consistently by trading in and out all the time. That's not to say short-term investing is bad. But it takes strategy, discipline, and sometimes knowing when to walk away. Now, let's talk about long-term investing. This is the slow, steady, patient approach. You invest in assets like index funds, mutual funds, dividend stocks, or even real estate, and you let time do the heavy lifting. You're not chasing quick wins. You're building compound growth. Over years, not months. Why does this work? Because historically, and I mean historically over the last 50, 100 years, long-term investors have come out ahead. Even when markets crash, even during recessions, even during global uncertainty. The people who stayed in, who rode the ups and downs, who didn't panic and sell at the wrong time, they saw their money grow. Why? Because the longer you stay invested, the more likely you are to smooth out volatility and capture the market's natural upward trend. That's the magic of long-term investing. It's not about trying to time the market. It's about time in the market. But let me ask you something real. Which one is better? Short-term or long-term? Here's the honest answer. It depends on your goals. If you need money soon, in 6 months, a year, 2 years, it's probably not smart to put it all into volatile stocks. The risk is too high. The market might not recover fast enough. But if you're investing for retirement, or your kids' college, or your financial freedom 10 years from now, that's when long-term investing becomes your greatest ally. It removes the pressure to predict. Turns stress into strategy. It turns patience into power. And maybe that's something we all need more of in this world. So how do you choose? Here's a simple way to think about it. If you're going to need the money within 1 to 3 years, consider safer, more stable options like high-yield savings, CDs, or short-term bonds. If you don't need the money for at least 5 to 10 years, that's when it makes sense to explore stocks, index funds, ETFs, and other long-term assets. And if you're in between, you can balance both. There's no rule saying you have to be all in on one strategy. Some people invest aggressively for the long term and keep a smaller account for more active, short-term plays. Some build a core portfolio, then layer on other strategies as they grow. It's your money. It's your life. Make it work for you. So, short-term or long-term, it's not just about money. It's about what you need, when you need it, and how comfortable you are with the journey. And if there's one thing I want you to take away from today's episode, it's this. Clarity beats hype, time beats timing, and your future is worth the wait. Thanks for listening to Invest with Alex. If you found this episode helpful, make sure to subscribe and share it with someone who's just starting to think about their investing future. We've got more clarity, more strategy, and more calm conversations coming your way. Until next time, stay smart, stay steady, and invest with intention.